Welcome to our comprehensive NZD/USD analysis report covering the period from September 15th to 20th, 2025. In this presentation, we'll examine the New Zealand dollar against the US dollar, providing you with detailed technical analysis, key market developments, and actionable trading recommendations for both short and medium-term horizons. Let's dive into the data and discover the opportunities in the NZD/USD market. Let's start by examining the current market position of NZD/USD based on TradingView data. As of our latest data point, the New Zealand dollar is trading at 0.58570 against the US dollar, showing a daily decline of 0.44% or about 26 pips. The pair opened at 0.58832 and has been trading within a range of 0.58538 to 0.58920 throughout the session. Looking at the technical performance metrics, we can see mixed signals across different timeframes. While the pair has shown weakness in the short term with a one-day decline of 0.44% and a more substantial 5-day drop of 1.61%, the medium to longer-term picture shows some resilience. The monthly performance is positive at 0.67%, with a 6-month gain of 2.05% and a year-to-date increase of 4.71%. However, it's worth noting that the one-year performance remains negative at minus 6.13%, indicating that despite recent gains, the New Zealand dollar has lost significant ground against the US dollar over the past year. The technical indicators are currently neutral across the board, with both oscillators and moving averages suggesting a market that's waiting for a clear directional catalyst. This chart illustrates the recent price action, showing the pair's struggle to maintain momentum above key technical levels. Now, let's dive deeper into the technical analysis of the NZD/USD pair. The current technical landscape reveals several critical levels that traders should monitor closely. The most significant resistance level sits at the psychologically important 0.6000 mark. This round number has repeatedly capped upside attempts and represents a major barrier that bulls need to overcome for any sustained upward movement. Just below this major resistance, we have immediate resistance at 0.5980, which corresponds to recent swing highs. On the downside, the pair is currently testing an important support level at 0.5850. If this level fails to hold, we could see an acceleration toward the next key support at 0.5800. Let's turn our attention to the broader market analysis and key news events affecting the NZD/USD pair. The headline story dominating the New Zealand dollar's performance has been the weaker than expected GDP data. This economic contraction has significantly increased market expectations for more aggressive rate cuts from the Reserve Bank of New Zealand. Analysts are now pricing in a potential 50 basis point cut at the October meeting, which would put additional pressure on the Kiwi. Simultaneously, the US Federal Reserve's interest rate decision and forward guidance have been major focal points for market participants. The Fed's policy trajectory will be crucial in determining the US dollar's strength in the coming weeks and months. Another key development has been the evolving expectations around RBNZ policy. With economic data continuing to disappoint, markets are now anticipating a more aggressive easing cycle with multiple rate cuts projected through the end of 2025 and into 2026. Looking at the New Zealand dollar's movement analysis, we can see that it has been under consistent pressure following these weak economic releases. The currency has lost ground against most major currencies, not just the US dollar, reflecting broader concerns about New Zealand's economic outlook. The key influencing factors for this pair include the diverging monetary policies between the RBNZ and the FED, weak New Zealand economic fundamentals, and fluctuations in global risk sentiment. As a commodity currency, the New Zealand dollar is also sensitive to changes in global trade conditions and commodity prices. Our market sentiment indicators show a decidedly bearish tilt, with 60% of market participants holding a negative outlook on the NZD/USD pair, while only 25% maintain a bullish stance. This sentiment distribution reflects the challenging economic backdrop for the New Zealand dollar. Now, let's examine the specific trading signals and recommendations for the NZD/USD pair based on DailyForex's technical analysis. According to analyst Christopher Lewis, there's a potential buy signal that traders should watch for. The trigger condition is straightforward. If the New Zealand dollar closes above the critical 0.60 level at the end of New York trading, this would signal a buying opportunity. For this trade, the target is set at 0.6150 with a recommended stop loss at 0.5933. This setup offers an attractive risk-reward ratio of approximately 1 to 2.3. The key technical points supporting this analysis center around the 0.60 level, which represents a major psychological resistance barrier. This round number has capped upside attempts multiple times, and a confirmed break above it would signal a significant shift in market sentiment. However, it's important to note that this signal comes with a caveat. Traders should wait for confirmation after the FOMC meeting before taking positions. The Federal Reserve's policy announcements could significantly impact the US dollar and, by extension, the NZD/USD pair. A break above 0.60 after the Fed's decision would provide stronger confirmation of a bullish continuation pattern. Currently, technical indicators remain neutral, suggesting that the market is in a consolidation phase and awaiting a catalyst to break out of its current range. As shown in this technical chart, the pair has been testing resistance levels but hasn't yet shown the momentum needed for a decisive breakout. Patience is key here, as jumping into positions before clear confirmation could lead to false signals and potential losses. Remember that trading decisions should always be based on a combination of technical analysis, fundamental factors, and proper risk management principles. Let's focus now on the key technical levels that will guide our trading decisions for the NZD/USD pair. Starting with resistance levels, we have three critical barriers to watch. R1, our nearest resistance, sits at 0.5980, which corresponds to recent swing highs. R2, the major resistance level at 0.6000, represents not just a technical barrier, but also a significant psychological level that has repeatedly capped upside attempts. Finally, R3 at 0.6150 would be our target in a sustained bullish scenario. On the support side, S1 at 0.5850 is our immediate support level, which the pair is currently testing. A break below this could accelerate downside momentum toward S2 at 0.5800, a more substantial support zone. If bearish pressure intensifies, S3 at 0.5750 would be the next level to watch. There are several key observations worth highlighting about these technical levels. First, the 0.6000 level represents a significant psychological barrier that has rejected multiple upside attempts. The current price at 0.5857 is testing the S1 support level, and a decisive break below 0.5850 could trigger a cascade of selling pressure. Additionally, the 0.5980 to 0.6000 zone has formed a resistance cluster that has repeatedly turned back bullish advances. Looking at the technical outlook, the NZD/USD pair is currently consolidating near the key support level of 0.5850. The technical indicators remain neutral, suggesting that the market is waiting for a catalyst to break out of its current range. The pair faces significant resistance at the psychological 0.6000 level, which has capped upside attempts in recent trading sessions. Now let's discuss specific short-term trading recommendations for the NZD/USD pair over the next 1 to 2 weeks. We've identified two potential trading strategies based on key technical levels and market conditions. For traders with a bullish outlook, we have a long strategy that requires patience and confirmation. The entry point should be a confirmed break above the 0.6000 resistance level, specifically requiring a daily close above this psychological barrier. Once triggered, the target is set at 0.6150, with a stop loss placed at 0.5950. This setup offers an attractive risk-reward ratio of 1 to 3, meaning the potential profit is 3 times the risk. For those with a bearish bias, our short strategy is triggered by a confirmed break below the 0.5850 support level. Again, we're looking for a daily close below this level to confirm the breakdown. Once triggered, the target is 0.5750 with a stop loss at 0.5900. This provides a risk-reward ratio of 1 to 2, still favorable for disciplined trading. The chart on the left shows the short-term outlook for NZD/USD, highlighting these key levels at 0.5850 support and 0.6000 resistance. Notice how the price has been respecting these boundaries, creating a range-bound environment that could break in either direction. It's important to emphasize that these are not just arbitrary levels. They represent significant zones where market participants have previously shown buying or selling interest. The 0.6000 level, in particular, has psychological significance as a round number and has repeatedly rejected upside attempts. Looking beyond the short-term horizon, let's examine the medium-term outlook for NZD/USD over the next 1 to 3 months. We've developed two potential scenarios based on our analysis of economic fundamentals, central bank policies, and technical patterns. Our bullish scenario, which we assign a 40% probability, would unfold if we see a dovish turn from the Federal Reserve coupled with a stabilization in the New Zealand economy. Under these conditions, we could see the NZD/USD pair reach a target range of 0.6200 to 0.6300. The recommended strategy for this scenario would be to look for buying opportunities on price dips, particularly near established support levels. First and foremost is risk management. This is the cornerstone of successful trading and should never be compromised. Always use a stop loss to protect your capital from unexpected market moves. A general rule of thumb is to never risk more than 2% of your trading capital on a single trade. This ensures that even a series of losing trades won't significantly deplete your account. Equally important is emotional control. The markets can trigger strong emotional responses: fear when prices move against you, greed when they move in your favor. However, successful trading requires discipline to stick to your trading plan rather than making impulsive decisions based on these emotions. Remember that consistency beats intensity in trading. This brings us to the importance of having a well-defined trading plan. Before entering any position, you should clearly define your entry criteria, exit targets, position sizing, and risk parameters. A trading plan removes ambiguity and helps maintain discipline during volatile market conditions. Finally, commit to continuous learning. The Forex market is dynamic and constantly evolving. Stay updated with the latest market news and analysis that might impact your positions. Regularly review your past trades to identify patterns and areas for improvement. The best traders are those who can adapt to changing market conditions while maintaining their core principles. As a closing reminder, this report is for informational purposes only and should not be considered investment advice. Trading foreign exchange on margin carries a high level of risk and may not be suitable for all investors. Always conduct your own research and consider your financial situation before making trading decisions. Thank you for watching our NZD/USD analysis. We hope this information helps you navigate the Forex markets more effectively.